Hello everyone, it's Khaled. Welcome to today's daily pitch, 19th of Jan 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Well, today I wanted to have a short summary, if you want to say, of what took place on Friday during the weekend and how this affected DXY, silver, and gold. So, give me just 1 second to double check the sound and then we can proceed with our analysis and trade ideas. Okay, guys. So during last week, usually let's talk about gold. Gold was trading in a consolidation range, nothing major taking place. These are the previous trade ideas. Nothing major taking place until Friday. We saw some strong profit taking move or a downside move, and this week, a couple of hours ago, the markets opened with a gap up. First, let's zoom in a little bit to the lower time frame and dissect what took place for this strong sell-off. It's very important or very nice to see that the reaction took place at our previous area of interest. I know the price action was really fast, so it was a bit hard unless you had a limit order. So basically, the first move that took place, it was here on Friday, mainly during NYSE session. We had a headline from the US president saying that he wants to keep Kevin Hassett in his place, and Kevin Walsh has the higher probability to be taking the position of Fed Jerome Powell whenever he finishes his period. What does this mean to the markets? Kevin Hassett is known to be more dovish. He's more related, like he has a more into cutting interest rates than Kevin Walsh. That's why this was reflected the following. Let's start with DXY. Looking at DXY, we can see now we are on the 5-minute time frame. We can see that DXY started to move higher because the markets are pricing in that the next Fed chair will not be as dovish. He could keep interest rates higher for longer. This was reflected strength on the US dollar and weakness on gold and silver. This is the first event that took place. During the weekend, the US president gave us a headline that he will be putting tariffs on several European countries, since they are not supporting him with Greenland issue. And as well, the European countries retaliated, and we are seeing some kind of escalation and another trade war tensions. How this was reflected, the week opened with a gap down. The dollar index currently went from approximately from the 99.5 down to the 98.9, while the dollar had the gold had the following movement. We had a strong gap up from the 4,600 up to the 630, and we printed a new all-time high, $10 shy from the 4,700. This is what happened. Let's have a look right now on trade ideas and what are the possible scenarios we could have. Of course, all the fundamentals are still supporting gold bullish movement. But let's be realistic that no one really wants to buy gold or any asset class at this higher time frame prices or at the most expensive prices. So for us as traders, it will be more profitable and we will have a better risk to reward ratio in case we will wait for a pullback and then the price move up. Keeping in mind that today we have a US bank holiday. Usually on US bank holiday, the volume and volatility will be lower, but due to this market event or a fundamental catalyst, we saw the gap up and we saw such price, volume, and volatility. So the first scenario I will be looking for on gold is the following. I would like to see price retesting the previous lows, which is at the 4,630, showing us some kind of rejection, and in this case, we could at least have a target to the 4,690 once again. Additionally, if the volume and volatility and the bullish momentum is still continuing, in case we broke higher, I know it's very tricky because we will be in a price discovery mode and you will never know where the next reaction will take place, but we will put some psychological areas. Of course, the first psychological area will be the 4,700, and I believe in case we broke higher, we could be reaching the 4,720. So this is scenario number one that I would like to see. On the other hand, if we broke lower, in case we broke lower and we were able to fill this gap, I would like to see price retesting, which is a favorable price area at the 4,540 to 550. Breaking lower and reaching this level, this doesn't mean that the gold bullish momentum supported by the bullish fundamental catalyst are over. This means that we are just having a small correction, a small pullback, and buyers could position themselves once again. If we zoom out, we are on the 30-minute. Let's zoom out on the 1 hour. We can see that we will have a nice price action at this level if we react here. Here we rejected it on Friday, and in case we reach it once again, it would be nice to see this as well. And in this case, in this scenario, we will even have a better risk to reward ratio and ranges to play. The final scenario that we could see, and in this case we need some, I think, some fundamental catalyst supporting gold bullish momentum and more profit taking on gold in case we broke lower. Well, breaking lower, I hope and I would like to see a retest of the 4,400 and such price movement. But realistically speaking, for the next couple of days, in case we don't have any additional like headline that we are not expecting, I believe these two scenarios, scenario number 1, 4,630, or scenario number 2, 4,540 to 4,550. These are areas that I will be monitoring closely. That's it on gold. Of course, there's no need to rush any trades today, keeping in mind, as we said, that after we saw this impulsive move, currently gold is just consolidating in a range and we have a bank holiday. So maybe we should wait till tomorrow for any of these trade ideas to take place or areas of interest to be tested. Let's move on to silver and see what is going on. Similar to the price movement on gold, silver gapped up, but it's very interesting that silver is having a very strong volume and volatility per session. So for anyone trading silver, number 1, watch out for the volume and volatility, very strong volatility. And in addition to that, you know that the contract for silver is different than the contract for gold. Like the 1 pip for silver is around $5 at the 0.1. The 1 pip on gold is like $1. So just keep this in mind. And now speaking and looking at the price action, silver is still supported, similar to gold, supported by all the bullish momentum related to the fundamentals. In addition to that, silver is highly used in manufacturing, especially solar panels, chips, electric cars, and there is several years back there is some shortage. One more catalyst for silver is that it is highly being traded, highly being, how do you call it, highly traded by individuals after this strong bullish momentum. So they are trading it on leverage. It's giving more and more volatility. So the prices I will be looking for on silver are the following. The first area, of course, for me, and that's personal, I will never buy from these prices. Even in case we broke higher, I know that our next target or a very strong psychological area will be the 100. We can put it here at the 100. But what do I prefer to see on silver is the following. I would like to see price keeps rejecting this level, the 93.8 to the 94, moves down, retest the 86.5, and from here I start to see that the bearish candles are getting weaker and we start to see some bullish candles. What does this mean? If we zoom in a little bit to the 30-minute, if we look here, we had a strong bearish momentum and we started to see some bullish candles. This is a bearish candle with a long wick. This is a bullish candle, a smallish bearish candle, and reaching the 986.5, we started to see some series of bullish candles. How do we translate this in terms of reading the price action? This is translated that the bearish momentum is not enough and buyers are jumping in from these levels. So I would like to see something similar or like similar to this one. Price broke, retested once again. Here we have like a double bottom, here retested once again, and series of bullish candles started to show. I would like to see similar price action, a rejection at the 86.5 before taking advantage of the following. Here at least you have a beautiful target from the 87 to the 93, so you're not just trading the breakout and you will never know where the next reaction, because you are at a new all-time high. My next scenario, what if we broke lower? Well, breaking below the 86.5, seeing like an intraday candle, a bearish candle closing below this level, I will be waiting for the next area, which is the 83.3 to the 83.5. In case we broke lower, I will be looking for the following price action, and I believe this will be an interesting area as well for anyone looking to trade silver. For me, only these two areas of interest I will be looking for: 83.5, 86.5. Other than that, I will stay outside the markets. Even if we broke higher, I know a lot of people will have FOMO whenever they see any asset class having a volume and breaking into new all-time highs. But trust me, it is much better to wait for a pullback than enter than to trade just directly the breakout of the price. And you will never know, for example, in case we broke the 94, you will never know the profit taking will be 95, 97, 100, maybe digging a little bit higher, 101, then a strong profit taking move. That's why wait for pullback than continuation, which is the better situation in terms of risk to reward ratio. So guys, that's it for today. I just want to give a quick update of the fundamentals that move the markets on Friday and Monday. What are the price expectations? And as we said, keep in mind today it's a bank holiday. We could see price just getting slower until tomorrow. We will see better pricing in the markets. Thank you so much for joining, and we will see you soon.